My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes while keeping them out of jail. So today I wanted to talk about the evolution of a business and the creation of business entities. I have a number of clients who reach out to me, and they're in the beginning stages of their company, or they're looking to get an idea off the ground. And I get a lot of questions often about formation of business entities. There's a bunch of information out there about it. LLCs, corporations, which one to do, what's one over the other, what's the advantages. So what I wanted to lay out was the life cycle, the steps that I would recommend, especially when someone's just starting out as far as your business entity to operate. So the first thing I tell folks, and I'll preface this by saying this is really just for tax purposes and not for legal purposes. So for tax purposes, you can actually operate your business without a company. You don't need a formal company to operate your business in the eyes of the tax world. So you can operate under your name, which is called sole proprietorship. So with some folks, if they're just really trying to get off the ground and trying to get some things going, you don't really have much activity, one of the things I recommend while you're getting things going is to simply just operate under your name. Now, this would be more so for service businesses. If you're providing a service to someone, it's something that may not be capital intensive. So if you're someone like an accountant or a consultant or something like that, if you're just getting off the ground and you're in a state where it costs a good amount of money to get your company going and off the ground. I know California, create an LLC, that yearly fee just to have the LLC is, I believe it's $800. That could be a lot if you're just trying to get off the ground. When you're first starting out, it's minimal amount of transactions, minimal activity. Operate under yourself. It allows you to get off the ground, and you don't necessarily have to worry about the intricacies of setting up the company and the fees and all this other extra stuff. That's what I recommend when first starting out. Now, if you have a little bit more resources and you're looking to get something a little bit more formal, you're up and you're rolling, then I would say you may want to look at going the LLC route. And the reason why I love the LLC versus creating a corporation, the IRS and most states and locales allow you to, if need be, treat your LLC as a corporation. You can go to the IRS and say, hey, I know I have an LLC, but I'd like to be treated as a corporation, without getting too much in the intricacies of the advantages of one over the other. I like the LLC because it gives you the flexibility where if you need to get the tax benefits of a corporation, you have the ability to do so simply by filing a couple pieces of paper with the IRS or your state and your locale, if they allow it, that you can be treated as a corporation. Now, one thing to keep in mind though is that you can't jump back and forth. So if you're an LLC and then you decide to make that election to be treated as a corporation, I believe you must stay that way for 5 years. You can't just hop back and forth each year. So that is one thing to keep in mind, but the idea is that you have the flexibility. Now, usually I tell my clients the S corporation does provide some tax benefits over just being taxed as an LLC. But once you decide to go the corporation route, there's a lot more compliance issues that you have to go through versus an LLC. The biggest one being that you have to have payroll, so that kind of creates a whole other set of expenses. And then once you get taxed as a corporation, you also have to file a separate tax return for the corporation versus if you're with an LLC, you can put everything on your personal return, assuming that you're the only owner of the company. What I usually advise my clients, where at that threshold as far as when you decide you want to take your LLC and elect to be taxed as that corporation, my rule of thumb is that if you take all your revenues, take all your expenses, do not include what you pay yourself, and if you're clearing anywhere from say 75, maybe 80,000 plus or more a year. If you're clearing that between all your revenues and expenses, again, not including paying yourself, so do not put paying yourself in this equation. If you have roughly 80K and up in profits, then it might be time to consider switching over and getting yourself treated as that S corporation. So that's usually the progression, that I advise my clients, where start out, go to the LLC. Once you get to a certain point, then you can make that transition and ask to be taxed as a corporation. Now, when you do that, and that's the beauty of this, you can ask to be taxed as a corporation, but you're still an LLC. You don't actually have to go through all the extra paperwork to become a corporation, but you can be taxed as one. So that's a life cycle or the progression of entities, entity formation. Again, I just wanted to do it because I've come across a number of clients that have been ill-advised on creating entities. They've created the wrong entities at the wrong times, and it actually wound up costing them quite a bit of money. That's all for now. So if you have any more additional questions on this topic or any other tax or accounting topic, feel free to reach out. Love to help. That's all for now. Talk to you on the next one.